last 6 months post Donald Trump regime, we can see the volatility has been very much rising, escalation of global geopolitical tension. Take an example of this Monday when everything was cooling off. We have seen all of a sudden Israel. There was a news that Israel can attack on Iran's nuclear sites, or we can say Russia Ukraine peace talk was going on, and all of a sudden we have seen rising of sanction or activities. So this type of geopolitical tension or a sudden spike in crude oil prices, like yesterday we have seen Brent was around $66. It could exorbitantly it will impact the rupee. On the surprise rebound, definitely a US fiscal concern or shift in the Federal Reserve policy could be the impacting the emerging currency also, including rupee. So I think next couple of months is going to be, in fact not a couple of months, we can say with Donald Trump as a president, we can see anything can happen either from the geopolitical side or either from the central bank side if they take any Federal Reserve makes any policy changes. See, Indian economy, or we can say India, China, all this economy are basically trying to push their exports, and whenever rupee or we can say local currency depreciate, it is good for our export. However, we have seen Barclay, Bank of America, everyone has been targeting, like Barclay is targeting year-end forecast should be around 89.50. We are trying to be under Make in India. So I think one side government is trying to reduce our import, trying to push our export. So I think new normalcy would be slowly and steadily moving towards, let's say, 87, 88. So I think it's a win-win for Indian market also, so that it could not be a major costlier, we can say, as the rupee is getting depreciated. Very tricky question, because when we talk about the import part or we can export part, things would be totally different. But on the perspective of the user, like we are talking about the parent with the kids trying to go abroad for a study, definitely weak rupee is going to be slightly costlier to them. But I think government has done a very good job creating more opportunity in India. But yes, definitely studying abroad or we can say international traveling would be getting slightly costlier as of now. But if we compare with the any other Asian countries, we can find the percentage of fall in domestic currencies being slightly stable as compared to any other country. So I think there will be a pinch for studying abroad or traveling abroad, but other factors like our import will be restricted, our export will get boost. So one side we will be getting benefit, other side we have to sell something. Whenever we see the Indians number, let it be inflation, let it be we can say inflation is very quite in line. Growth is quite good, like recently GDP, GST number and other numbers are been quite going well. So I think if we talk about Indian perspective, we are seeing very stable as of now. Globally, India is more focusing on export side. If continuous depreciation in rupee will be there, then definitely it will be boost to our export and restrict our imports. So I think there was not a free fall like situation, and also the rising US side, we can say like US Treasury yield, government fiscal concern, shifting the investor sentiment. But overall, I think a slow and steady weakness would be beneficial for Indian economy. Yes, surely, because if you talk about the foreign, our forex reserve or other whatever the indicators are showing, Indian economy is going well. If you compare with the other Asian currencies, I'm not comparing the Indian currency with Pakistan, Sri Lanka, Bangladesh, but other growing economy also, then India is doing fairly better. So I think RBI appears to be allowing slightly, we can say, calculated depreciation in rupee. This approach aims to support export competitiveness and manage the foreign reserve exchange reserve without aggressive intervention. See, right now, geopolitical tension, or we can say the action taken by the central banks, are being on top. US fiscal policy, including the tax cut, we have already seen ECB, BOE. Consequently, US Treasury yield has surged very rapidly in few month period, with the 10 years bond yield reaching around 4.6. All these development make US asset more attractive, prompting the cash flow away from the emerging market like India. So I think definitely slight, we can say, cautiousness is going on emerging market currency like Rupee has already seen this. See, while some depreciation is a natural market adjustment, and particularly countries like India, China, where we are trying to make our share in Western world, persistent and rapid decline could be a signal of deeper issues. But indicators such as widening the CAD, significant capital outflow, dwelling forex reserve would be the warranted closer security. But I think it's a natural adjustment, we can say, frankly, because falling like other Asian currencies we have already seen, but India is going with a very calculated depreciation. But I think it's a natural market adjustment, and RBI is also giving a calculated measure to this.